Hello guys, and welcome to the June 22nd Camp Financial Market Update. So I did just want to go ahead and say when I start this one, so obviously the first three episodes here have been done early morning, the next morning prior to the market open. I intend to change these so that they'll be after the market close on that day. So, like today is actually June 23rd. Sorry. And I'm talking about, what happened in the markets yesterday. And, a lot that's due to one of the things I do on the side is umpire baseball and football games. So, right now I had a lot of baseball games after work. Usually they start at 6 o'clock, get home at 8:30, eat dinner, then spend a little bit of time with the family, and then get up early and do this versus staying up late the night before. I just feel like I'm a little sharper usually in the mornings, so that's why I like to do my thinking, I guess, stuff in the morning is probably the simplest way to put it. So with that said, let's start with the market yesterday, and we're going to start in the S&P 500. Actually, you know what, before we go there, so I mentioned that I umpire baseball and football games, and I said previously that I like to do give people ideas, I guess, for ways to either make more money, save money, personal finance. So if you want to make a little bit of extra money, getting licensed and becoming a umpire is a great way to make a little bit of money on the side. It's also a great way to kind of help give back to the community, obviously, as somebody that's involved in our community, in my community here in Central Ohio. I appreciate being able to go out and help out and have a good time doing something that I like to do. So okay, now with that said, let's take a look at the S&P 500 yesterday. So the S&P 500 as a whole, I believe it was down a little bit. It's not at the top of my list here, so I'll have to take a look at that. But so what was holding the S&P 500 back yesterday? Technology, basic materials, and services sector were in the bottom five. Again, CarMax was just outside the bottom five. Still carryover from their release of earnings, or their release earlier this week. Information. Adobe Systems was the biggest pain point in the S&P 500, down almost 6%. Due to concern about declining sales, and HP Inc. also took about a 5.5% drop yesterday, followed by Southwestern Energy Company, which I have limited knowledge of, honestly, so that's one that I'm going to have to add to a list of something to take a look at. Figure out why is it down? Does it still have a good long-term? Is there a good long-term story? Maybe this is a chance to pick up a company like that at a nice cheap price. So also in the bottom five were FedEx and the Williams companies. Like I said, just outside of that was CarMax, which is still feeling the pain from earlier this week. So let's flip that, take a look at who performed the best in the S&P 500 yesterday. And again, we got some the first independent oil and gas new field exploration company. They were the leader. So we had 2 basic materials, 2 healthcares, and a service in the top 5. So new field exploration up about 5% yesterday. And another company that I'm going to have to do some research on, I don't know much about, Abbott Labs, obviously very strong healthcare player, was the number 2. Urban Outfitters had must have had some pretty decent. I didn't see anything in the news on them yesterday. I'm wondering if they put out maybe some guidance that's indicating that they're gonna get a little pop, or I see they put out financials last week, so I have to look into that a little more to figure out what drove Urban Outfitters higher yesterday. And then Newmont Mining Corp and Celgene Corp. So with the Newmont, let's go ahead and talk about that. Obviously, they are feeling some of the positives still of the global uncertainty on where the stock markets are going, where interest rates are going, where the monetary value, monetary policies are going. All of the excuse me a second. It seems that all of the gold companies have performed quite well. I personally bought into one back in January and have ridden it for a pretty good gain thus far. So, and we'll talk about one of mine. So now let's look at the Dow Jones. So in the Dow yesterday, obviously the Dow was down. Let's see, I got the number right here. Dow was down a little over 0.25%. But the interesting thing is, out of 30 stocks in the Dow, only 6 were positive yesterday. Merck and Johnson & Johnson from the healthcare service, or the healthcare industry, obviously drug manufacturers. Johnson & Johnson, has more than just drug manufacturers. They're kind of almost a conglomerate now, but that's still how they're classified, and then that's fine. So after them, you've got DuPont, Walmart, the Boeing Company, and Procter & Gamble. And Procter & Gamble is one that I think of similar to Johnson & Johnson, right? So I kind of feel they're both more in the consumer goods sector. Band-Aids, all that fun stuff that they're both involved in. So those were our leaders yesterday in the Dow. Obviously, again, like I said yesterday, these companies usually don't face quite the pops up and down, with them being the largest companies in the world, so, or at least in the US. And now let's look at the 5 laggards. So our 5 in the bottom were McDonald's, Visa, Chevron, Pfizer, and Travelers. Just looking at those real quick, the biggest was the most down was McDonald's, down 1.64%. My guess is a lot of that is still people taking profits from when the stock ran all the way up over $130 a share. They pay a pretty good dividend. Right there where it's at right now, it's at just about 3%. which is probably going to be a good place for McDonald's to kind of bottom out at, kind of find a bottom until we figure out exactly what's going to go on with all the Fed interest rate changes, and obviously the Brexit deal that's going on this week. And until we get a little more market uncertainty out of the system, a 3% yield is probably a good place to be. I haven't done a deep research into McDonald's, so I don't know if what I'd be willing to pay for personally, but it's definitely one to take a look at with the yield that it's giving you. So alright, now with that done, I do want to take a look real quick at some so yesterday I talked about Thomson Reuters that I purchased back in September, and I'm just going to kind of work forward to some of the of all the companies that I've bought in this technicals system, and go through all of them. So after Thomson Reuters, I purchased GE back in October 27th at $29.49 a share. It's currently trading at $30.78 a share. So we are up about 3.4%. Obviously, again, that takes into account my transaction fees. So total gain actually is going to be total gain is going to be a little higher than that, probably around 5%. I bought 13 shares, so I invested just right around $400. Again, that's what this system, when I built it, that's what it was based on. Now I've got a little more money in my trading account, so some of the new ones that I buy in this system are gonna have I'll probably be buying in about $800 worth at a time versus $400. But so obviously at only buying $400, you do have to be concerned a lot more about the transaction costs, because it takes your transaction costs at E-Trade are $9.99 a share, or $9.99 a trade. You trade in and you trade out, that's $20. So when you're only buying $400, that is 5% of your potential gain right there. So that's why when I built this system, I knew those things, and the system's been profitable, even having to pay a 5% transaction fee, essentially. So, or is that 5%? Yeah. So that is it, guys. Like I said, so I'm in GE. If you heard yesterday, I'm in Thomson Reuters. Those are two of my longer term holdings in this system. Both are currently up. Could definitely still turn against me, but that's it. So if you have any questions, any specific stocks that you'd like me to research, talk about here on the podcast, YouTube show, just let me know. You can reach me at Chris M at campfinancial.net. I'll put that in the notes, and you can always find me, and feel free to find me on Facebook, Twitter. Twitter's probably the better one, at C Malik. And that's it for this morning, guys, so take care.